Today very well may be a day that silver stackers can celebrate because of what the potential could be for a new trend in the silver market and its price. I'll discuss what I mean in this video as we explore. I know, silver's price is down today. What's to celebrate? The gold to silver ratio is still extremely high. It's above 104 to 1 right now. So what's to celebrate about silver? Well, I think it's because of how it has acted today in comparison to gold. Gold got hit fairly hard today after flirting with all-time highs. In fact, it got right up to $3,500 an ounce. It was 30 cents shy of hitting that mark today. But we saw a downturn in the gold price, down $44 right now. It's trading at $3,381.40. Silver is down half a percentage point, just a half a percentage point, down 16 cents today. But it was trading mostly in positive territory today. In fact, it did break through resistance at $33 an ounce. And the fact that it is not getting pummeled as hard as gold right now is something a little unusual for silver, because usually when gold drops, silver drops much more. But I think we're starting to see a little bit of a trend here that I think we've seen little bits and pieces of it in the last year or so when I've covered this type of activity. It's unusual, but it's happening more often, it seems. But there is a lot of noise at the $33 level. It's a major resistance level, and there's a lot that's going on in the technical analysis side, but there's also some stuff we have to look at in terms of just natural market forces that are playing a role here. And it did break below the crucial 50-day moving average, only to turn around and show signs of life. And silver continues to look at this $33 level as a major barrier. And if we can get above there, then we may have a real shot at the market trying to break out and going much higher. Now, again, this is technical analysis from FX Empire, and I really don't hold my hat on any of this because we did see it trade above $33 before, and then it got smacked right back down again. But what's going on here is all the precious metals are down today, and I think we may see a bigger hit if we start to see more activity, much like what we saw today, continue to play out throughout the course of the weeks ahead. Summit Metals is a place that you ought to consider if you're looking to buy during the dips. And right now, this is technically a dip period for gold, especially down $42. And they have great deals out there on fractional gold, so check out Summit Metals. At least keep them in mind if you're shopping around to see if they are right for you. They have great, excellent customer service as well. Market participants will have a lot of concerns, and silver is a precious metal, but we have to understand it's an industrial one as well, and you have to keep in mind that the economic concerns around the world right now, there's a situation where traders just simply don't want to get too aggressive in this market because the industrial usage situation may be rather anemic for silver going forward, especially with regards to the tariffs. It's much more sensitive in that area than gold is. Gold is being buoyed up essentially by central bank demand and other factors where people tend to run to gold in that market and that kind of environment. But silver very well could be on a trend, especially if we see things start to level out with tariffs. It can only get so much worse in terms of the prospects of uncertainty. So therefore, I think in a way, the market may be baking in a worst-case scenario if it pans out with tariffs. And that definitely could mean that we're going to start to see them adjust to this situation, to that situation. Try to find ways around it. It's a complex scenario. We've not really navigated this type of scenario before here in the United States with this types of policy. So trying to perceive demand for silver is something that is going to be talked about and contemplated as we adjust to the new environment. And you think about it, tariffs, let's say they go into full effect from China. A lot of these Chinese companies they sell to the United States because it is it's competitively easy to do so. They can easily compete with domestic products in terms of price. That will not change. They will still want to do business with American companies, is my guess, which means that they may eat some of the profits that they had been making before. And of course, prices will rise, but it may not be a tit for tat scenario. Let's say it's 115% or just 100%. So a good and service that used to cost $1 would now cost $2, conceivably, but not necessarily. They may eat some of that cost, and it may only cost 50 cents more. So those are the kinds of things you have to consider here when negotiating for, especially in competition with American companies that can provide the same service for less, potentially less, especially if it's a 100% increase or what have you. So those are the kind of things that you have to understand, and then look at the benefits of dealing of that competition. American companies can be competitive again in that regard. And some of these foreign countries may decide to invest in America and produce products here, circumventing the tariffs altogether, invigorating economic activity, which means more silver demand, which means higher silver prices. And those are the kind of prospects they're thinking about that could lead to silver not getting hit as hard, because if there's economic demand for products that contain silver, that means that the silver's price is probably going to go up. It's really done fairly well, all things considered. I think no more can we necessarily compare it to gold, but obviously we do and have and will continue to do so. But we shouldn't necessarily gauge it in one form or another as to where the price is going to go, because they're so different. But I think today's action in the market, I think, tells us and could be a continuation of what we're seeing from time to time that could lead to a new trend for silver. Now, I can't say for sure exactly how that's going to pan out, but there's hope there, because of all the times we've seen silver get knocked down and gold be propped up, it's only a matter of time before, I think, silver is going to shine in a couple of different areas. The first area is the fact that it's undervalued as a commodity, not necessarily so much as a precious metal, which many of us feel it's undervalued there. But investors are going to look at the opportunity in that regard and invest, because demand is going to probably pick up for the metal. That's area number one. Area number two is understanding silver as a precious metal, and such a wide gap between the two metals provides an opportunity that some are willing to risk that silver is going to go higher in the paper trade, as well as in the marketplace for physical, such as you see here with coins, rounds, and bars. And so, if that being said, it provides an opportunity or a risk situation, because there is risk in trading the ratio or betting on something because of some other asset class. And so there may be some folks that are willing to take that risk and buy silver. And so those are the things that we're looking at as a potential trend line to see in the direction of where silver could go. As for me, I kind of don't play the ratio. Some people say, well, Sal, are you going to sell some of your gold and buy silver? And the reason why I have a hard no on that is because I feel like I have enough silver already. I'm still low on gold compared to the silver holdings that I have. It would provide a good opportunity if the ratio were to narrow, that I could trade back for gold. But whenever you trade the ratio, especially in the physical form, you have to be very careful, because most local coin shops are not going to just trade ounce per ounce, even though to much extent it would benefit them, because they can earn more on silver than they can on gold. But I don't know of any local coin shop that I have visited that will just do it straight up. I kind of wish they would. I might consider it. Playing the ratio in that regard. If you're going to play the ratio, it's best to do that with ETFs in that world. However, when you're buying ETFs, you're not actually buying silver, you're buying exposure to the price of silver. And there are still some fees associated with that. But nonetheless, it'll be very interesting to see how things play out. I'm keeping an eye on it, but with the gold and silver down, what has caused the pressure of those prices to go down is largely kind of a resurgence, if you will, of the stock market. The Dow Jones Industrial is up over 1,000 points right now. The Nasdaq is up over 420 points. The S&P is up over 120 points. The U.S. dollar index has gone up 0.64%, strengthening itself. Now, still below 99, but just barely. So the dollar is strengthening here. And so those are the kind of things we're seeing play out. Crude oil is also up. And so all the commodities are up slightly, save for nickel. It's the only one that's down. So those are all the different factors and things that I consider when looking at the markets here. Even Bitcoin is now back up over 90,000 per coin. So there you have it. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.